Hello guys, welcome back again kwenye YouTube channel yangu, na leo nimeandaa video kwa wale ambao walikuwa wanatamani kujua in a simple way namna ya kutrade order blocks. Na video hii ni very short, it is very simple, na kwa ajili ya wale ambao wanataka kupata uelewa wa order blocks kirahisi zaidi bila kupitia ugumu kwa aina ya trader. Hapa nimeandaa slide ambayo ni simple na inaelezea kwa urahisi zaidi namna ambapo mtu anaweza kutrade order blocks na ukawa unapata risk to reward ratio kubwa, na pia unapata most of your trade ukawa unapata profits. So let's jump to the topic. Kwanza kabisa, what is an order block? An order block are areas where institutions are either buying or selling from. These blocks are formed prior to large impulse to already pre-planned direction. Hapa wanavyokuambia hii ni zile ambazo areas ambapo wale big banks or institutions wana buy au wana sell. Lakini katika hizi areas most unakuta kunakuwa na large impulse move, ambapo unakuta candles zinaenda katika high value impulse. Zinapokuwa either kama zinaenda juu au zinashuka, zinaenda katika impulse ambayo ni kubwa sana, lakini zinavorudi kuja kuretest kwenye ile order blocks zinakuja in some kinds of consolidation front. Zinashuka sio kwa speed kubwa, sio kwa impulse kubwa, lakini kwa impulse ambayo ni ndogo. So the reasons we trade order blocks is because for the institutions to make a move they need to grab liquidity first. Sasa iko hivyo, ili hizi large institutions make a move au zitengeneza an order block, first of all there should be a liquidity price. Kwa lazima kuwe na liquidity, ambazo liquidity ni either iko lows au most tunakuta katika Asian range. Pale most Asian range huwa haina volume kubwa, kwa unakuta most ile Asian range huwa ni consolidation areas. Kwa unakuta price inapokuja London session lazima ifanye grabbing of liquidity, either iende chini au iende juu, and then irudi kwenye ile area ili test, and then itaenda kwenye the pre-planned direction. So this is from retail trader stop process. Kwa mostly iko lows hizi au unakuta support and resistance, au watu wanasema trend lines, wale ambao wana trade in retail mindset. Unakuta wao katika area hizo wao wenyewe ndio wana, kwa mfano kama kuna area kwenye resistance, yakifika kwenye resistance ana buy. So mostly these institutions tends to liquidate hizo prices, kwa sababu wakikuta sehemu kama hiyo na iko lows na iko highs, wanachokifanya wenyewe wanafika mwanzo wana grab liquidity katika high impulse, and then wanarudi in a consolidated way, wanarudi kwenye ile order block, and then they go to that direction. Kama ilikuwa inaenda chini, then it will continue down after grabbing the liquidity and retesting the order block. So hawa retail traders wanaita stop hands, ambao ndio sisi kwa smart money concept inaitwa liquidity. So institutions drive price to grab this before creating the desired move. Institutions do not use stop losses. Kwa institutions they don't use stop losses. Kwa nini? Kwa sababu wenyewe wana kipato kikubwa. So what they do, they just allow price kwenda in the opposite direction first, ambapo ni grab liquidity and taking the orders of the retails. Kwa kenda wakatake zile stop losses za wale retail traders ambao wana trade either support and resistance, either trend lines, au wana trade labda things like that. Hao wakisha grab liquidity zao first watakuwa katika loss, lakini baadaye ile price itarudi ni consolidation way, itarudi and then wataanza kurudi kwenye faida wao. Baadaye itafika pale kwenye ile order block, baadaye kufika kwenye order block itafika test ile tunaita return to order block RTO, and then they will respect that area, and then itaanza kwenda kwenye direction yao, ambapo wao sasa ndio wataanza kupata faida, kwa sababu wana capital kubwa, so they can handle a big sum of loss before they get the profit. Kwa ndo namna ambavyo institutions zinafanya namna ya kupata faida zaidi kwa grab our retail traders mindsets ambao wana trade trend lines, ambao wana trade support and resistance, au trade labda candlestick patterns. Ni hivyo. How to trade order blocks. So first stage is identifying your higher time frame by direction bias. That's the very important thing. Lazima ujue katika either weekly or daily what is your direction, what is your pre-planned direction. Ujue kwamba in a weekly the direction is either an uptrend or is a downtrend. You have to know kama buyers wako in higher kwa demand ni kubwa kuliko supply, au supply ni kubwa kuliko demand. Kusema supply ni kubwa maana yake sellers ni wengi kuliko buyers, lakini kusema demand ni kubwa maana yake buyers are greater than more than sellers. So you have to check in a weekly perspective first. You have to check in a weekly direction bias. If in weekly it is an uptrend, if it is an uptrend, you have to look for chances for buying. So whether you are looking for intraday or swing trade entries, you still need to understand which way the market is moving for the pair that you are focusing on. So you have to look to check where the market structure. What is the market structure? Is it market structure uptrending or downtrending, or is it ranging? So you have to know. Essentially, you want to identify order blocks from weekly down to hourly or work off there. Unaweza ukianza kusema katika time frame, it may either start in a weekly, depending on how you trade. If you are trading up to 1 minute or up to 5 minutes, it depends on you. So if you are trading in your entry time frame is entry confirmation time frame is 15 minutes, you have to check for the weekly time frame to check whether the major direction, what is the major direction of the market. So however, the more experience you gain, you may find that you can trade intraday moves by having a short-term directional bias from a lower time frame and finding entries. Let's go direct to the charts. For those who are looking for mentorship is available for those who want to learn more. About this concepts of order blocks in a major na bigger way, kwa sababu hapa tuna simplify kwa ajili ya wengine, lakini the little mentorship is available. If you don't understand Swahili, you can either be taught in English. So as you can see here, you can see this, it is higher time frame 4 hour. So you can see the major direction here, you can see is what downtrend. So what opportunity you have to look for is selling opportunity. The market is forming lower lows and lower highs. We are in a clear downtrend. Kama unavyoona tuko kwenye clear downtrend, hapo unaona hapo down kuna break of structure. Kwa hiyo as you know, the moment inatokea break of structure in a very higher impulse direction, ikiwa na institution candles kubwa, what happens is that it will come in a ranging way, like what you see here, and then it tests that supply area or that order blocks, because we say at kwenye supply areas hapo pia ndo ndani yake kuna order blocks. So there are a lot of things to combine between supply and demand and order blocks, ambapo nitafundisha kwenye mentorship class. Also, so you can enroll in that mentorship class, you can check me, you can DM me, just check me either in the comments or check me in my number, in my WhatsApp number, or in my Instagram account, that's Serengeti_trader. As you can see here also, how it shows, that direction here. Mentorships is available. 3 things we look at before entering, vitu ambavyo tunavicheck before entering any trade. There are some sort of things that we check before entering any trade. Those things, number 1 is look at the overall market structure, high highs and higher lows, or higher lows and low highs, bearish or bullish. So angalia the overall market structure. What is overall market structure? Is the overall market structure bullish or bearish? Is this market uptrending or downtrending, or is it ranging? Is it making higher highs or is it making lower lows? If it is making higher highs and higher lows, it means that is an uptrend, that is showing a bullish trend. And if it shows the lower lows or the lower highs, that means it is a bearish uptrend. It is a bearish trend, which is a downtrend. Number 2, the second thing to look before entering, look for supply or demand zones according to the higher time frame trend. You look for the supply and demand zone according to the higher time frame trend. So if the higher time frame trend is downtrend, then you will look for supply zone, and if you are in a bullish market, you look for demand zone. So if the overall market structure, if the overall market structure according to maybe in a weekly time frame, it shows that it is uptrending, that means buyers are more. So if buyers are more, you have to look for opportunities to buy. And I have to know that we usually buy at a discounted price and we sell at a premium price. And this is a concept that I cannot teach here, but I'm teaching my mentorship class. So for those who wishes to enroll, you can just check me, you can DM me, you can check me in my contacts here. You're in a comment, then I'll look for you. Then we contact teachers and we will be connected to have. And these are very low prices. I just teach students at $50. So you just contact me. that will give you knowledge. Look at the lower time frames and look for the lower time frame confirmation. This can be in form of reaction to a 4-hour order blocks, or it can be an order block forming at the lower time frame inside the higher time frame point of interest. So you look at lower time frames and to look for lower time frames confirmation. So that's how we do. It depends on you. Are you trading in 4 hour, or are you trading 1 hour? Are you entering in 15 minutes, or in 30 minutes, or in 45 minutes, or in 5 minutes, or in 1 minute? It depends on you. So you have to check for lower time frames, and then in that lower time frame you have to check for the lower time frame confirmations. Maybe you have your own style, but we use this concept of order block to just on not only one strategy. You have to combine different strategies ili upate strategy ambayo ni imara. So let's go to an example. Drawing of an order block or an area of supply or demand. We focus on the last opposing candle. As you know, also order blocks can be defined as the last bearish or bullish trend before a reverse trend. So in a bullish market, an order block is the last bearish candle, is the last bullish candle before a downtrend, before a move to the downside. And then after that there will be a retest, a return to the order block, which will come in a ranging way, and then that order block will be retested, and then the move will continue. I was talking about the downtrend. I'm sorry. In a downtrend, you look for the last bullish candle before a down move, and for the bullish market, you look for the last bearish candle. You see, that's an order block. So the last opposing candle, in a simple way we say that an order block is the last opposing candle before the big move away from the swing high or the swing low. I think somebody that people understands me. Then we have this. We have this. As you can see here, we have this chart. As you can see on your own, I think you can understand. I'm sorry that I don't have those editing features, and it's so tough for me to edit here. But I think you can see in a normal way. You can see. Yeah, it is like that. Yeah, you can see here. As you can see this chart here, you can see that arrows which shows an order block or the supply area. As you can see, it is saying arrow number 2 inasema identify where the supply zone or order blocks is in line with the overall trend. Kama unavyoona overall trend hapa ni downtrend, because we have seen there is a break of structure at the top here. You can see, and there's a break of structure there down. As you can see here, there are lower lows. I wish I could have some abilities to edit here, but it's normal. For those ones to be taught in a very good way, you can have a class in a Zoom app and describe everything in a good way. I don't have a good application for showing how to use this perfectly. Also, you can see here the break of structure down here. You can see the price is going. We have to expect price to go and retest and return to the order block here at the top, and then it will continue with a trend which is downtrend. So you can see price is creating lower lows and lower highs, showing us that it is a downtrend with price breaking the structure lows. You can see the structure lows, as you can see very well. If you cannot see well, you can just, these pictures are able to explain to you. I think I don't need to have those cursors to show you here. I think you can see, you can read. Yeah, I think it will not disturb other people. I think they will be okay. As you can see now, from that mindset here at the top, we said it will come back and test here, and here it has gone back, and then it has tested back, and then it's continuing the downtrend. So you can see here, the lower time frame is 15 minutes, and as I said, you have to check also for the lower time frame confirmation. The lower time confirmation is here. It has come back to an order block, and then you execute your trade. As you can see here, the trade was executed, and you have to check your TP has to be on the last rows, as you can see here. Yeah, example number 2, you can see here the chart is here. You can see price is creating higher highs and higher lows, showing a strong uptrend movement. A break of structure highs indicate the buyers are stepping in. As you can see here, you can see, if you check well, you can see break of structure here, and there is an equal lows. This is liquidity area. There's a break of structure, but also there is a liquidity area. So this is a very, very important price. So you have to check for the last opposing candle. The last opposing candle. For here it will be a bearish candle before an uptrend. So you have to look for that, and then you have to mark it, and then you have to wait for the price to come back and retest this area, which is called the RTO, the return to the order block. And then if price comes back here, then you expect price to go up. Number 2, identify demand zone, order block, by which eliminate here. I explained that. So you can see here, I think so we go to the chart which shows how it responded. As you can see here, after break of structure, price came back with in a ranging way, in a consolidating manner. As you can see here, after break of structure, price returned back to the order block in a consolidating way, in a ranging way. So as you can see here, price is now going up. So yeah, as you can see also here we shows how the levers move. How if the movement was on downtrend, then how can you trade levers? You can go against the trend. How can you do that? And for that to happen, there has to be a break of structure, which sometimes other people call it change of character. As you can see here, there has been a break of structure, BOS. You can see BOS here. This is a break of structure. We notice structure shift as price breaks the recent lows, the recent lower high level. As you can see here, the lower high levels have been broken, and this price has changed the direction, which is also called a change of character for some other people, or for other traders just still call it break of structure. But there is a difference between BOS, and there is a difference between BOS and change of character. So I think I have a lot of things I wish to teach people, but for those who wishes to be taught, they can just enroll in my mentorship class, and then we can continue learning. I think I'm still new in this, and I'm still trying to grow my account. I'm still trying to tell people that knowledge is there, but the problem is that sometimes it is hard for me to explain everything in a normal way. We still lack capital, so I wish people to enroll in my mentorship and get that knowledge that I have, and then we all make money, we all make dollars. So this is how you can see how a trend can change, how it reverse trend. You can see how can you notice that there is a change of character, and then the price and then the movement is changing. As you can see here, the movement was downtrend, but now we expect the price to go up. We expect an uptrend, a short uptrend. So in break of structure here, or change of character, that is what it tells us that the direction is about to change. So the break of structures now forms a potential demand zone or order block for potential entries. So the place where this movement started and caused a break of structure, that's where we mark our order block. So the original place where that movement, that impulse move started and caused a break of structure or change of character, that is where we find our order block or demand zone, and we mark that demand zone or order blocks and wait for the price to retest that price in a ranging way, in a consolidating way, and then we expect after that the price will move to our desired direction. As you can see here, the chart, as you can see here, yeah, I think you can see. You can see here, as you can see here, yeah, you can see. So this is what happened. As you can see here, as you can see this chart here, there is an arrow here, a green arrow, a green wick that went back and touched this demand zone. I think if you zoom well, you can see here where I have pressed my buying my position here. There is a green arrow, a green wick, which went back here to the order block and retested it, and then the movement continued. But this one, this trading in a reverse direction of the market, there are different features you have to learn, not just simple like this. So those people who wishes to understand more, they have to check me, and then we can start our mentorship class and they can learn everything. Also, you can see here, you can see well, just check the charts here. Check the charts here. They try to explain everything, how an order block is respected. As you can see also here, there is a green candle which went back here and touched this order block or our supply zone. So as example is here, advanced examples. As you can see here, on here we try to learn on how to determine the perfect order block. Which one is the perfect order block? Which one will be respected? And mostly the order block which will be respected is the one where there are some equal lows. It is either down or below equal lows, or it is down or below the liquidity areas. So that order block is most likely to be respected. Also, the order block which will be most likely to be respected is an order block in which, if it is if we are looking for demand zones, we check the area with discount prices. So, and that area where there is, we use a Fibonacci. We usually use a Fibonacci tool to determine where is the discounted price and premium price. But I think for those who wants to learn more about this, you have to check me and I'll explain everything in my mentorship class, because I've started now to enroll people in my mentorship class. It is through Zoom app, and we can have a meeting and I can teach you, and it's going to be a lifetime mentorship, and it's through a very short, very low amount of money. It is just $50, and we will have a lifetime mentorship, because I know this thing is in my blood. I like to teach people. I don't like to put people in a dangerous spot. So you can just check me and we can do it in a simple way. You can just learn how to trade in smart money concept, how to trade Wyckoff, how you can combine Wyckoff, how you can combine demand and supply, how you can combine the Tony wave, different things, and they are very short tempo, and then you can understand everything. As you can see here, how the price was respected here. See, and this here you can check where there is a liquidity below. Here you can see this area written liquidity, but you can see this equal. This is what we call, other people call them support. These are areas where banks mostly likes to grab liquidity first, and then after grabbing liquidity, they go again to the upside, and there and the upside you can see they go, and then they break structure there to the upside, and then they come back to this order block. You can see this blue 1 hour order block, and then they'll come, as you can see here, the price has come back, and then it will continue to go up. As you can see here, after touching this order block, the price is going up. That's how smart money or banks trade. So we continue. As you can see, the charts are explaining here. The charts are trying to explain how to trade. That's how it goes. Then I think for today we'll end here. We'll continue in the next video. Thank you for watching. Thank you so much.